Well, last week it broke above a critical resistance target. That was the previous all-time high, right around 141, and then it continued to move higher. So it gained about 6 or 7% by the end of the week. But the critical detail is that it broke above a trading range. It broke above a previous high as a significant resistance point, which indicates that the trend is still up. I would expect to see the stock continue to rise over the next week going into the earnings report. The earnings report very well could be a strong catalyst for bigger gains over the next 2 to 3 quarters.
November has been a hectic month, despite the fact that it is only halfway done. Over the past several weeks, businesses in every industry have been releasing their third quarter earnings, in addition to the U.S. presidential election and a Federal Reserve meeting that included another decrease in the prime lending rate. However, the hectic month is far from over. Another significant date is November 20, particularly for Nvidia, a semiconductor company that releases its third quarter earnings on that day. Here's why I believe the stock will rise after the report, and why I suggest you take action if you're thinking about purchasing it. Is it a good purchase? Over the past few weeks, I've devoted a significant amount of my time to reading through artificial intelligence, AI, businesses' quarterly releases as an investor in numerous technology equities. The Magnificent Seven, Microsoft, Alphabet, Apple, Meta Platforms, Amazon, Tesla, and Nvidia were the first equities I examined. Nvidia is the only member of the Magnificent Seven that has yet to release its earnings for this season. This week, that will be different. All eyes will be on the AI darling's development as Nvidia releases its third quarter earnings on November 20. Changes in Nvidia's share price from November 2022 to November 2024 are depicted in the chart below. The purple circles on the graph represent Nvidia's earnings reports, which are annotated onto the line. As you can see from the above, Nvidia's stock has increased dramatically over the past 2 years. The status quo is not a roughly 1,000% return on the share price in just 2 years. The AI story has undoubtedly contributed significantly to Nvidia's stock price increases over the past 2 years. The main point I want to make, though, is that Nvidia stock typically experiences significant volatility before earnings. This forthcoming report is no exception. Nvidia's stock increased by 8% from November 1 to November 13. In just 2 weeks, that is a significant move. As you can see from the above, Nvidia's stock has increased dramatically over the past 2 years. The status quo is not a roughly 1,000% return on the share price in just 2 years. The AI story has undoubtedly contributed significantly to Nvidia's stock price increases over the past 2 years. The main point I want to make, though, is that Nvidia stock typically experiences significant volatility before earnings. This forthcoming report is no exception. Nvidia's stock increased by 8% from November 1 to November 13. In just 2 weeks, that is a significant move. I believe there is a good probability that Nvidia's stock will rise after its results announcement next week. If past performance is any guide for this specific report, a lot is at stake, and I would advise investors to avoid becoming enmeshed in narratives that are driven by momentum. Regarding Nvidia's earnings announcement next week, I think that the company's third quarter numbers won't be given much weight by investors. Instead, I believe that the vast majority of investors will focus on one thing: direction for the future. The progress of Nvidia's impending release of the Blackwell GPU architecture will be closely monitored by Wall Street analysts. According to certain reports, the new chipsets for the upcoming year are already sold out. But so far, the entire Blackwell story has been favorable. But recent financial troubles at Supermicro Computer might end up becoming more significant for Nvidia. Rumor has it that Nvidia is shifting Blackwell orders from its major partner to other AT infrastructure experts in response to a series of disruptions at Supermicro. These are merely rumors. Hopefully, the report or the conference call that follows its release will reveal more. I don't have a crystal ball that can predict the movement of Nvidia stock following the company's earnings announcement next week. On the one hand, it is clearly known that Blackwell is in high demand right now. By the end of the year, Morgan Stanley is even projecting that the new product would generate $10 billion in sales. Nvidia barely made $10 billion in revenue for the full year in 2020. To put that number into perspective, I predict a favorable response from investors, which will be mirrored in the stock price if they find out next week that Blackwell is on track. The stock of Nvidia may soar to a new high if the Blackwell outlook happens to above expectations. Having said that, I am concerned that the choice to leave Super Microcomputer might have been made too late. Although I am not very concerned about Blackwell's long-term success, I believe that any short-term difficulties Nvidia faces could allow the competition to gain ground. If I'm correct, Nvidia may be facing an unwelcome setback in its supply chain, which may negatively impact its chances for short-term growth and cause the stock to drop. Even while I still have high hopes for Nvidia's report next week, I would advise investors to hold out, especially given how much the price is already fluctuating in anticipation of the earnings call. This study has too much riding on it, and not enough specific details about Blackwell have been made public. Purchasing Nvidia stock before next week's report, in my opinion, is a move better suited for a day trader than a long-term investor. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
There's a lot of movement and a lot of talk around NVIDIA that happens every time their earnings report comes up. Now, one thing I want to point out is last time we were talking about NVIDIA's earnings report, everyone was waiting for that report to come, and then the stock price fell immediately after earnings report. Are we expecting or anticipating anything like that surrounding this earnings?
I think it would be safe bet to assume that there will be a price pullback after that. There's a lot of sentiment and euphoria driven or embedded in the NVIDIA price. So even with a good report, there's probably going to be some profit taking. But any dip that forms would be a likely buying or entry point for new money for new investors, both for short-term trades and for long-term investments.
So let's talk about getting in for those traders who are looking to make a profit off of some of the swings that are going to be happening with NVIDIA this week and next week. Where's a good entry point?
Well, right now, the 141 level looks like a pretty solid entry point. That is our resistance target, the previous high that was broken last week. The market is moving up from that level, but technical theory says that the market is likely to pull back and retest for support. It could pull back as far as that 141 level. If it were to touch to that level, I would expect to see a pretty strong confirmation from the market that that is a buying opportunity.
In an effort to broaden its global presence and wean itself off of its need on Asia-based production, Taiwan Semiconductor, the largest contract chip manufacturer in the world and a significant NVIDIA partner, is investing $65 billion in 3 new sites in Arizona. In order to find capacity, IBM is also apparently cutting off customers in China before the Trump administration's anticipated export limits on high-end technology early next year. It's interesting to note that CFRA analyst Angelo Zeno believes Trump's anticipated tariffs will largely benefit NVIDIA, which excels at almost everything. According to him, the Biden/Harris strategy has been to restrict China's access to specific cutting-edge circuits and devices, such as GPUs and extreme ultraviolet lithography systems manufactured by ASML. Wall Street analysis team believes that if the price is right and he keeps a certain technological lead, Trump would be open to selling more sophisticated AI chips to other countries, including China. Some of NVIDIA's largest clients are also searching for strategies to protect themselves from the company's dominant market position, as well as from any supply, trade, or tariff concerns that would limit their capacity to develop, train, and eventually profit from their AI investments. As they grow their businesses and seek cost savings, Amazon informed investors last month that some of its cloud clients demand better price performance on their AI workloads. In order to train large language models, Microsoft is also developing a new line of AI accelerators that it calls the Maya 100. These might both assist it in reducing its need on NVIDIA and provide its Azure cloud users with a more affordable option. However, it appears to be a longer-term strategy because, in order to increase their clientele, Microsoft and Amazon would both need to enter the contract chip production market, and there isn't much capacity available outside of TSMC, Samsung, and GlobalFoundries, based in New York. With analysts predicting October quarter revenue of $33.12 billion, almost twice the year-earlier total, Nvidia appears poised to continue to grow when it reports after trade closes on Wednesday. As Blackwell sales begin to impact the group's top line, Wall Street predicts revenue in the range of $37 billion for the last few months of Nvidia's fiscal year, which ends in January. Investors anticipate that Nvidia would generate $185.4 billion in revenue by the conclusion of the fiscal year in 2026, a startling 205% growth over 2024 levels. "We're in this computer revolution right now," Huang said at a September Goldman Sachs Talks event. "What's incredible is that the first $1 trillion in data centers will accelerate and create generative AI, a new kind of software. If you look at the entire IT industry up to this point, we've been producing tools and instruments that people use," he continued. "For the first time, we will learn skills that improve people. Because of this, people believe AI will go beyond the trillions of dollars spent on it and data centers to the field of talents." Nvidia's stock dropped 3.26% during the day and reached a one-week low of almost 4.45% when it finished Friday at $141.98 per share. With a market value of $3.48 trillion, the stock has nevertheless increased by more than 50% over the last 6 months, which is about 5 times the gain for the nasdaq. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Thought on that? I know you're looking at Nvidia and its connection to a commodity, silver. How come? Give me the 60-second on this, KG.
Yeah, Oliver, so you know that I actually track silver and its correlation to NVIDIA or the semiconductor space as a whole. And you can kind of see that silver generally, at least over the last year, over the last year, it has been, for the most part, potentially a leading indicator. It's not going to be a one-for-one, but it's something I'm keeping my eye on. Silver broke out before NVIDIA did. Silver is now breaking down below, the area of resistance around that $32.30 level. NVIDIA is still elevated. So if we are going to still see that catch-up trade, we might see some headwinds for NVIDIA. Once again, this is not a guarantee, but this has been a very strong correlation that I'm keeping my eye out on. Let's see if either silver is going to reverse. Maybe the growth story kind of gets back into the market. And if not, if the correlation is still going to be strong, which is around an 87% correlation right now, maybe NVIDIA does pull back here a little bit, maybe retest that breakout high there.
Amid a wider sell-off in rate-sensitive tech companies ahead of the company's eagerly awaited third quarter reporting on Wednesday, Nvidia's shares closed the week down, regaining around $150 billion in market value. The ability of its supply chain partners to assist Nvidia in meeting the insane demand for its new Blackwell line, as CEO Jensen Huang has described it, is the company's biggest challenge rather than the technological advancements of its competitors. Nvidia holds a nearly 80% market share for high-end chips and processors that power artificial intelligence. When used to train large language AI models, Blackwell processors are reportedly about 2.5 times faster than NVIDIA's older H100 chips, sometimes referred to as Hopper, when used alone. When such models are applied in actual applications, a process known as inferencing, they are around 5 times more effective. Naturally, that performance has a cost. Blackwell GPUs are said to cost between $60,000 and $70,000 per unit, which is roughly twice as much as their H100 forebears. A fully loaded server with 72 chips packed inside can cost up to $3 million. This is made feasible by NVIDIA's more expansive chip architecture, which allows chips to be interlocked and layered, resembling Legos, according to the needs of individual clients. If consumers are fortunate enough to obtain them, Blackwell's backward compatibility with the H100 allows them to swap out outdated chips for the more recent, quicker, and more effective variants. Fortunately for Nvidia, and eventually its investors, its largest clients are willing to spend money. One of its largest clients might be Elon Musk, the CEO of Tesla and President-elect Donald Trump's main budget cutter, who manages a number of companies in addition to his duties. According to a CNBC story last week, his XI firm is seeking to collect almost $6 billion in new funding in order to compete with OpenAI and its industry standard ChatGPT. That group would be worth about $50 billion with such money. According to the article, some of the money will be used to purchase about 100,000 H100 chips the following year. In addition, he wants to replace his current cluster of H100 chips with 300,000 for Tesla. Musk stated at a Wall Street Journal CEO Council Summit last spring that NVIDIA GPUs are currently much more difficult to obtain than pharmaceuticals. He's not entirely incorrect. According to reports, over 350,000 H100 chips are needed for Mark Zuckerberg's AI goals for Meta platforms, which are focused on training and inferencing its Llama supercomputer. It won't be inexpensive to upgrade those to the speedier Blackwell line, which is completely sold out for the upcoming year. This year alone, Meta and its hyperscaler competitors Amazon, Microsoft, and Alphabet, the parent company of Google, are expected to invest almost $200 billion in capital projects related to the emerging AI technology. In what Amazon CEO Andy Jassy referred to as a once-in-a-lifetime potential in generative AI, UBS analysts predict that total will increase to $267 billion next year. According to IDC estimates, the total amount spent on AI, including software, hardware, and services, is expected to more than double from around $235 billion in 2023 to about $632 billion by 2028. However, supply issues could reduce some of that demand. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community. Don't miss out on